I still believe this is the year where equities, European equities, will perform at the end.
So Dmitry, at the beginning of 2016, some analysts were saying that 2016 was the year for European equities. Now this hasn't really been the case, so can you give us an overview of what's happened so far this year?
Well, I think 2016 still have a few months to go. We're still in the market, and I think European equities still will rebound quite shortly. We will see a rebound in the next 2 to 3 months. Brexit, I think, added to the systematic risk where people decided to go away from the markets. But in September, we'll see always traditionally a pickup in stocks. The volume comes in, so we'll probably gonna have an uptick about 4 to 5% in European equities is expected just in September. But overall, of course, it's been a disappointing year for European equities. There hasn't been, particularly the financial sector. It's haven't rebounded. But the books are still, with regards of PE levels, they're still attractive. Now they're even more attractive than ever. So it's just question of timing. You have to be correct on timing to get in. The people who got in onto markets in June, July, they've been profiting incredibly from European sector, financials, banking. Particularly, I would say, if I would have to give 2 or 3 names, you have Credit Suisse, which rebounded over 20% in the last 3 or 4 weeks.
And you're right that timing is very crucial, but let's talk about these lags in performance. So you mentioned Brexit there. Has there been any other market areas that have really driven this performance lag?
I think Brexit was a main systematic risk. There haven't been any M&A pickup. So people it's been a huge disappointment in itself for equity markets. When on another side we have Fed, which is coming out with rates, we don't know if it's going to increase. We expect the increase in rates in September. I personally myself. Then on Japanese market, Japanese government hasn't been there with their QE. They were supportive to some level, but Japan haven't rebounded as expected as well. So we just have to see how it's going to develop. And I believe myself there will be a rebound in equities in Europe, particularly. US is a little bit overheated at this point, but European and Japanese equities look very appealing at this point.
And Euro stocks bank have dropped significantly this year to date. So has this been the worst performing stocks from all the banking sectors in the world, or have there been other areas that have also lagged?
Well, predominantly historically defensive sectors have lagged. You have utilities which have not performed as expected. You have financial sector, Italian banks, which have been the worst of the worst probably. You have Credit Suisse, like I said, which I mentioned earlier. Credit Suisse is down 48% on a year. UBS down to over 20% on a year, which hasn't been good for them, but at the same time, it's a good point of entry at this moment. Then you have when you have sectors as consumer discretionary sectors, which have been down performing in Europe as well. Particularly disappointment like Carrefour, but they've been up in the past months and past couple of weeks. Simply, they've been on an uptrend. I still believe this is the year where equities, European equities, will perform at the end.
So you're quite optimistic that September, October, December, November, that will be where it really picks up? I am.
What
areas are you expecting to pick up?
Consumer discretionary, number one, that's what I like. Healthcare, to the point, I would like to be precise, not biotech, which has been performing very well past couple of months. I would prefer insurers, like Zurich Insurance, still have some time to go, and some uptick on it. Then I like banks. Personally, I like financial banks. A lot of people do not. They say stay away from European banks. But trading, going back to Credit Suisse, trading at 10 francs, 11 francs. It's a stock which should be worth around, now models around 18, 19 francs per stock. So on a risk based areas, it's a very appealing proposition which you cannot ignore if you do have cash right now, and you have to have yield. It's investors are looking for this yield where we simply cannot get from anywhere else, and you're forced to have the performance. And I think with the volume coming in, it's certainly going to put up the stock prices up. And with a Fed rate going up in September, if it's not going to go up in September, it definitely will be up in November. Then we'll when investors will be forced to go into equities.
Well, it definitely has their appeal there. So thank you so much for coming in today to share your insights.
Thank you.
That's all from myself and Dmitry, but we want to see how you found this video, so please do like and comment on dukascopy.tv.